Hello everyone, welcome to Free Learning School. So we have another basic accounting video, and today I'll be discussing about journal entry, the definition of journal entry and how to record a journal entry and what is the importance to know journal entry. So before I begin, I can say journal entry is the foundation of accounting. I mean, you have the basic accounting equation and you justify the equation by putting journal entries. So initially you will see what is journal entry in accounting. And if you are new to my account, I will recommend you to subscribe to my channel and click the bell icon to get the videos. So a definition of journal entry is in manual accounting or bookkeeping systems, business transactions are first recorded in a journal. Hence the term is journal entry. Journal entries that are recorded in a company's journal will consist of the following thing. The number one thing is the appropriate date. For example, whenever you make a transaction, it can be a cash transaction or a credit transaction, no matter what, whenever there is a transaction, it happened on a particular date, on a particular time. So, date is very important because we get information based on transaction dates. For example, we get income statement and for a particular period. So if the date is not there, we cannot actually prepare any kind of accounting information or accounting report or financial report. So the first thing is date. Then the debit account and amounts. So you have to identify which account has to be debited and which account has to be credited. And for both debit and credit, the amount will be same. So this is very important that the amount will be same for debit and credit. And you have to write a short description or memo or a reference. For example, you just sold a burger from your burger shop. So you'll record that sales revenue will be credited and you received cash, so cash will be debited. So you debit cash and credit sales revenue. And you can write a reference that this is the number 50 burger on that day or burger sale. So this is the definition. Now we can see how to record a journal entry. Initially you have to identify the transaction. So there are generally three steps to making a journal entry. First, the business transaction has to be identified. If you don't know what is a business transaction, then you cannot actually record it. For example, you just you just called a customer. So will you record that information in your accounting system? I will say no, because accounting always deal with money. If there is no money involved, it doesn't need to be paid or it may be on credit, but a amount should be there. So it should have a monetary value. So the transaction must have a monetary value. So you have to identify the transaction whether it has to be recorded or not. For example, you provided 10 customer services. Will you record it or not? You will not record it. But if you buy a car on credit, you will record it because your company or your organization is getting the car and you're paying cash or you're making some kind of agreement that you will pay at some point. So you have to identify the transaction first. Second is analyze the transaction. After an event is identified to have an economic impact on the accounting equation, the business event must be analyzed to see how the transaction changed the accounting equation. So for example, you purchased a car and you paid cash. So what happened? You actually increased your asset, organization asset. At the same time, you decreased your organization asset by paying cash. So it actually, cash has been converted into car. So it has impact on asset side only. So one asset become higher and one asset become less because you paid cash, so your cash will be lower, and you got the car, so this is a fixed asset which will increase the company's asset. So then you have to journalize the transaction. After the business event is identified and analyzed, it can be recorded. Journal entries use debits and credits to record the changes of accounting equation in the general journal. Traditional journal entry format dictates that debit accounts are listed before credited accounts. Each journal entry is also accompanied by the transaction date, title, and description of the event. So as we told before that these are the things has to be there in a journal entry. So let's see one journal entry example. So one example is, for example, at January 1, 2019, your company issued common stock. So what you got cash as you are issuing the common stock. You have received cash, so the organization asset has been increased, and as we know that when the asset is increased, it will be debited. So here, hence on January 1, we have a date and account name, debit and credit. So the cash has been debited by $10,000, and common stock is mainly owner's equity. So owner's equity has been credited by $10,000, and I put a small comment saying that to record stock issuance. So on January 1, 2019, the company issued the common stock. That's why they have recorded cash debit and common stock credit and put a small note. So this is an example of journal entry. So I think you understand what journal entry is all about. So hope you enjoyed the video, and please do not forget to subscribe my channel and hit the bell icon. Thank you so much.